The reason why is we call it the iceberg effect. What you see in the market is not the market. You're just seeing a glimpse, the visible glimpse that they show you. Most of the action is happening underwater, and these are options trading. And also, we have a lot of data that suggests that if we don't keep doing this with the options, 1.1 trillion was a record. If they didn't do those calls tomorrow, for example, the market would collapse. That's the only thing holding the markets up. They're just squeezing shorts, constantly squeezing shorts, and once that ends, there's nothing holding it up anymore.
Wow, has the world changed in the month of June? I think it has. It's like the grand solar minimum war cycle overlaying with the 80-year fourth turning. Dogs and cats living together, and this is the world we face. Got Bob Kudla with me today, Trade Genius or tradelikeagenius.com, and also tradewith2030.com. Wanted to roll through some ideas as why everything is not turning out like it should. We get into an almost world war. They're talking about closing off the Straits of Hormuz, and then oil drops $15 a barrel. Bitcoin dropped down to 99,000, but back up to 107,000. A lot of people got wrecked on shorts on this thing, got wrecked on the oil longs, and just wanted to try to figure out why things are the opposite of what should be in a normal, real market. If a world war is going to be beginning, you think prices of things would escalate, especially energy, but it didn't. It's the opposite. So I'm confused too, and I just want to pick Bob's brain here, see if we can figure it out. So Bob, appreciate you joining me again. Tradelikeagenius.com or tradewith2030.com. And maybe I'll throw it off there. Like, at Trade Genius, how are you preparing for this or these inevitables or this inversion of everything that we're seeing right now?
Yeah, so let me answer that first and get the plug out of the way. Thank you for the lead in on that. So our algorithms look at momentum, and it looks at price levels. And so, what we see in the market is that the market is smarter than the news media. It's smarter than people's hopes and wishes. And so there's collective movement in stock prices. And when you get that, you get buy signals. And so our algorithm sees that, and we just go ahead and take advantage of that. So, one thing that we knew for sure, with Bitcoin, we call for Bitcoin 99,000, and it hit 99,000. So we see these things, and same with oil. Oil was getting out of range, and we just said, typically these things it's called sell the news events. And so we knew that oil was going to take a header on that. So if you want to trade with us, the algorithm's simple to use. It's see trade, take trade. You could also get in a room like Dave and I are talking. We have a VIP room, which is just awesome. And then we have another room that's just a chat room. It's a little less expensive, but everybody gets the same signals. I put a daily trade out for people so they can see how we do it. And I hold myself accountable on that. And we've had thousands of trades. We're averaging over 66% win rate. And we have an annualized gain on the trade you take at 71% annualized. So we do pretty well. And you don't have to trade our signals. You can trade your own stuff. And it's tried and true that we've pretty much had the same algorithm running for 15 years. Technology just allows us to show it now on the TradingView platform very effectively. Come check us out. We have specials running all the time with Dave, the DAP 2030 on the landing page. But if you come to my site, make sure it's tradelikeagenius.com. Make sure you tell people you came from Dave so we can apply the right discounts and so I can support this channel. Now, I'll answer your questions, Dave, is that the reason why is we call it the iceberg effect. What you see in the market is not the market. You're just seeing a glimpse, the visible glimpse that they show you. Most of the action is happening underwater, and these are options trading. Okay, so whenever the boat gets to one side or the other too far in extreme, you get an opposite effect because of the way the options are running. The closer you get to an expiration of an option, it accelerates the move either in that direction or massive reversals. So yesterday, they had $1.1 trillion worth of 0 days to expire call options. So they're trying to constantly be lifting up the big trades. Now the oil trade was interesting because Trump's out there actively trying to drive the price of oil down. The Chinese are actively trying to drive the price of oil down because it's in both their self interests to drive oil down. So when you heard the news about the Strait of Hormuz being closed, we had an initial knee jerk reaction higher. But the Chinese actually went public and said, we don't think that's a good idea because our oil goes through that strait. Well, as soon as that happened, and Trump went out there and said, drill, baby, drill. We're going to open up Alaska. Don't let this Iran news, dissuade you. Oil dropped $15 because everybody was leveraged long for Armageddon. And, look, I knew, I've been in the military. I knew that Iran had, unless they actually send missiles into Saudi Arabian oil fields, the price of oil is unaffected by what Iran does. Okay. And you just saw they shot 10 missiles into Qatar, the American airfield in Qatar. They intercepted all 10. In fact, our technology is just so incredibly advanced over everybody in the world that this poor mouth of our enemies are so strong is starting to ring hollow. So that's why the market just totally ignored it. And unless Iran does something on our shore radioactively, then this thing is Mox Nix, and Iran will be in a civil war. And that would be probably more of an area to worry about with higher oil prices. Because if Iran goes into a civil war, they throw out the mullahs, China has a big worry on their hands because those people are saying, hey, where were you 10 years ago when these people were killing me? Why should we sell you any oil? So I think that's why Trump stopped short too, because he doesn't know if he wants the chaos yet. So that's that. Now, why everything's so backwards is because of these option trades. Everybody's loading the boat one way or the other. And also, we have a lot of data that suggests that if we don't keep doing this with the options, 1.1 trillion was a record. If they didn't do those calls tomorrow, for example, the market would collapse. That's the only thing holding the markets up. They're just squeezing shorts, constantly squeezing shorts. And once that ends, there's nothing holding it up anymore. So that's why you're seeing what you're seeing. Look, these 2 weeks in June are typically weak, and they've just been throwing more and more and more contracts at it to keep it alive. We go into July, you got earnings reports coming out, you have blackout period for buybacks. And in August, you get the great reset of interest rate loans that were taken out in 2025 and 2020, 2021, 2022. All those low interest rate loans are basically now renewing. Those are arms that are going to renew. And those loans are going to go from 1.5% to 6, 7, 8%. And it's going to cause massive havoc, in the stock market over the next 6 months because profitability, some of these companies won't even be able to exist at those levels.
Unless they have a Bitcoin treasury, of course.
Yeah, well, even if you have a Bitcoin, let's say you have a Bitcoin treasury, you just have to hope Bitcoin keeps driving higher, right? Now, the good news is global liquidity is going up 4.5%. Bitcoin follows global liquidity. So you're going to see a general drift higher. But, if your business model sucks, all you have is a Bitcoin treasury to basically give to the creditors. And so, a lot of these guys don't have enough money to be able to survive. And a lot of people are late at MicroStrategy was early, Square was early. I guess they're not XYZ, whatever the heck they call themselves. But a lot of these people are just starting to buy Bitcoin, and they're buying it high. They're buying it in $100,000. So I don't think that's going to rescue many of these firms. But at the very rate, it doesn't give them any income. It's just a balance sheet thing. So,
could they take loans out against that? Could they pledge that as collateral to get some sort of operating capital out of that?
Oh, they can do some of it, but I don't think they have enough Bitcoin to get enough collateral to be able to offset the loans they already took out. So, and it's not just them; their end user customers took out these same loans, so their buying power is evaporated too. And some people just will pay the loan off and be done with it. So I know from people I know here in LA that have a lot of these zero rate arms, right, or these what do you call it, interest only arms that are basically, they go, the deals we did at these arm levels were profitable. The deals that we do when they reset are unprofitable, and I have to make a decision whether I need to sell and outrun, my capital appreciation, outrun my monthly losses I'm going to take on the properties. So
So wait, Bob, let me ask you then, is that what kind of volume of money are we talking about here in August going from 0 to 6%? I mean, what kind of tidal
trillion,
wave of flow is coming back in here that's going to disrupt the market?
trillions,
Trillions.
a lot of money, enough to disrupt the market. And look, Powell's been holding off trying to lower rates. So, you're already seeing, we had our first month over month reduction in real estate prices for sales. So it's already happening. And so, we're slipping into a deflationary environment, no matter how much they try to say we're inflationary, and tariffs are deflationary too. And you were talking about fourth turning and all this other stuff. Countries now are starting to turn inward. You have the United States saying, "Look, I got to protect my manufacturers." Europe is belatedly now worried about China. China is eating itself. They have this thing, as you probably know because you're closer to that than I am. They have this thing now called involution. It's basically a lot of work and getting nowhere. And in fact, the Chinese Communist Party has been fighting that notion for years, and now they now adopt it in their own speech because they have industries within sectors fighting each other, and they're not paying people. They're going below production costs. They're losing their export markets, and they don't know what to do with all this crap they have because the people can't afford it even at the lower prices. And you even, like, I'll give you an example that affects a US company. You have Starbucks, the coffee chains in China, the Chinese-based coffee chains, have drove down the cost of coffee to 40 cents a cup. Well, that's below Starbucks' ability to make a profit. And in China, they're making these people work for slave wages and crazy hours, in order to stay alive. They're telling their people, we got to do this to stay alive. They're basically trying to beggar thy neighbor. Well, that's very deflationary. And so Starbucks is like, okay, we may not be able to stay in the Chinese market. Well, that just cuts out a growth market for Starbucks, affects its stock price. So multiply that by every foreign company that's sitting in China. Okay, there won't be any foreign companies in China in the next 5 years because every industry is getting affected like this. And so just go across the world. That's the way it's going to be. And if the United States basically goes to Fortress America again, everything will just start to collapse. And I think we're already starting to see it.
Yeah, I can give you a primer 101 on that. So once the tariffs hit, the exporters realized they couldn't sell back to America. So what they did is they tried to direct all their exports back into the local Chinese market. Well, there were already a huge amount of players that were totally saturated, operating on 1%, 2% margins that had already captured that local market. And they were trying to jump in and then, find their share out of that. And I do have some wages for you. I watched a few interviews of people. The current rate that they're offering in China is 18 renminbi per hour on what you're talking about here for any kind of wages, especially in factories. And you got to realize with the exchange rate of 7.7 for a dollar, that's less than $3. And that's what they're offering. And they have lines of thousands of people in line waiting for those $3. I'll round it up, $3 an hour jobs. That's how catastrophic it was. To outweight that, America, outweighted them to the point where they collapsed almost instantly because everything was on that 30-day rotation. And once the ship stopped sailing and all those goods were stuck there, yeah, that rotation back into now, where do we sell? Well, we can't. There's no other market that can gobble up, American, a certain level of products. So they were trying to, push it in, and it's been a discombobulated mess ever since. They haven't ever straightened out all that ball of yarn that's twisted together. So I agree with you. China's in a world of hurt. And, they are actively calling on people to buy Chinese again, don't buy any foreign products, which goes right into what you said there. It's becoming bourgeois. They're encouraging people to buy gold and silver in the country to hold it. And if you are seen going in buying a Hermes handbag or like Gucci or whatever, any kind of foreign, exclusive high end product, you actually get social credit deduction off of your score because you're bourgeois again. It's almost like we're reversing back the clock back in the 1960s in the Cultural Revolution, but that's the primer for 101 if anybody's interested. And Bob, you're hitting it out there. Like, where do they go from here? So we'll see, where does that go? Like, Bitcoin forecast, anything out there? Just in a general sense, market up in July, down in July, up in August, down in August. And then where do we look for Bitcoin pricing? Because China aside, throw them over there. They're in a world of hurt. I'm telling you, they are in a world of hurt. Like they never thought they would be. They're definitely damaged over there.
Well, for Bitcoin, our view is we're going to probably have a bigger move down before we have a bigger move up. So we're now watching now to see if we make a local new high, which then could take us to the all-time high again. We have an opinion, but if our opinion doesn't match reality, our algorithm will tell us to buy or sell. But right now, it's kind of in a chop zone, like the market's in a chop zone. So
Yeah.
we're going to have to see. Ask me that question at the end of September. If we're not selling off at the end of September, then we're going to have what's called a crack up, last hurrah boom and everything, because then they're just going to be throwing money like crazy at the markets until it then collapses. So our view is this: July chop, August down, September down, October down, and then probably a lift into the end of the year. But overall, we see the market and it happened in 2000, 2001, where the market made a high early in the year, then it made a new high in May. This time we made a new high in June, and then we had 18 months market sell off because you can't sustain it. You can't keep throwing more option contracts at it. You can't justify the cash flow, and people's ability to spend is being curtailed. So that's our view on it. We don't think Bitcoin at this round is going to spin away from it. We think gold, silver, oil, everything will follow that move down. And then from there, when the liquidity goes full blast furnace, then I think you're going to see gold, silver, platinum, palladium, Bitcoin, oil just go parabolic.
What's the spark off on the blowtorch coming?
The spark would be Trump wanting to get his midterm election victories. So that spark will probably come like next May or June if the market is suffering. So that's our view on it. We're just watching it, month by month, day by day. In June, those last 2 weeks of June are usually pretty weak. Markets totally ignored it. And so you have to say, okay, when things don't go as you expect them to go, like seasonally, you pay attention to why. And usually when you're wrong, me personally, when the market is wrong based on historicals, usually that move the other way is pretty violent because people are positioned wrong. And that's what we're seeing here. Look at Coinbase. Coinbase is a company that's likely to go out of business here with everybody else doing custodian work and the banks and the hedge funds getting in. But Coinbase has gone 300% based on the future of a stable coin coming out. You can't justify Coinbase price on any way, shape, or form. It's a difficult company to deal with. And when the money starts to flow, you think BlackRock and those hedge funds are going to let Coinbase, gobble up all that profitability? Absolutely not. And they don't have a float. So wait,
let me ask about what about fiat? Or you're going to talk about crypto like Misty, fiat. You're talking those yield products there. So the inverse of Coinbase would be fiat, FIAT. So it's around 4 something right now. So you think
365? I bought this morning.
Okay, last time I checked, it was in the low 4, like 417.
Yeah, the last 2 days, this rip. This is a blow off top they're doing right now. It's been crushing fiat, but fiat's it's 365 and it's paying $3 annualized dividend. So you're looking at
100% on nearly, huh?
Yeah. So I told people today, I said, look, if you've been reluctant to get into fiat, just the price you get, even if you don't stay with it, you're probably going to get a 10% recovery on it, and at the least, and at the most, you bought that thing at the low, just like what happened to Tesla when Tesla collapsed, you loaded up on Tesla and you made really good money. So that's a good product. And what we're talking about here is these high yield derivative products out there that are game changers. And we showed Dave at the training, somebody's paying 130% yields. You got Palantir derivative, you have MicroStrategy derivative, you have GDX derivative. We just talked about that. You have Coinbase derivative long and short. You have Nvidia derivative long and short. And I mean, so you're just raking in the dough with these things. But there's a bit of a trick to it, and we talk about them every day in the room. So I love them. I probably have a third of my portfolio invested in these, and the cash flow has just been
Cash
sweet.
flow. Yeah, and I will say that was great. That meeting, like the energy in the room was just like high vibe. And then going out to dinner with you all that night, everybody sitting around talking, beyond that, but real life. But then how does all this mix into, the future and everybody? It was just a great time learning so much, met so many cool people. And not just that, but the knowledge there too, going through the slides and explaining things out, it was very different than trying to learn something through a video or even the interview like this, because you guys were there answering questions in real time, and I mean the questions were just nonstop. I don't understand this, can you help me with this? How does this work? And you never said no, no, I already talked about that once. It was like every single question was addressed and answered to the fullest, so everybody understood, which was real cool too.
And look, and the people in that training, these aren't like mom and pop retirees. I mean, you're talking CEOs of some companies in that room, and business owners, and these people can smell a fraud in a minute. So one thing that we do is that we have high renewal rates. Because I think we give a good service, and you saw that there's people come back again and again and again. So this question you got weren't juvenile questions. These were pretty hard hitting. These people are moving a lot of money around, and so yeah, I mean, we love it. I mean, I think my gift is teaching, and so it's a lot of fun to do, and it's fun. I mean, the jokes fly in those rooms, and so it's good to know your customers personally, and we really enjoy it. We're going to do it again in the fall, same place.
Oh, is it? Okay. I'll attend again.
Again.
Please give me a ticket to a slot so I can attend again.
Yeah. You can come. It's a big, that room's the biggest room. We're gonna do it in spring again, and then in Hawaii, we're gonna do one in Hawaii. It's gonna be more of a customer conference in Kona next end of next August. So
Big Island time, yeah.
Yeah, and the venue that we use for the training is they're customers, and they give us access to that beautiful training facility to train people. It's right outside of Nashville, beautiful facility, and so yeah, we really like it. And look, there's a lot to learn here. I think there's a lot of nuances, and I think one thing too that you get out of being with us is that we don't hype anything. I pretty much own most of everything I call out for trades. If I don't trade it, I tell people that, hey, I'm just putting this one out there, because I only have so much money too, and I'm really conservative. So I live off this stuff. And so I want to make sure that the stuff I'm putting people in is going to work for them. And then I count for every trade. So I can't hide. And it's good for you. It's good for me, because, you start seeing, okay, why are certain things not working? You look at your algorithm, you look at your personal self, and most of the time you don't follow your own advice. I mean, how many times, Dave, that the system tells you to buy and you don't buy, system tells you to sell and you don't sell. So, so a lot of it, what we do is we try to take our own worst impulses out with these systems. So we really like it. I encourage you guys to check us out. I think you really like it. What we charge for the service is nothing. I just had a customer conference here last weekend, and my customers told me I undercharge for the service. I just struggle with charging too much, because I just feel people are hurting, and people are getting taken advantage of, and I think it's fair price for what we do, and I think people really enjoy what we offer. And probably in a couple of days, you make the year's worth of the cost of the service anyway. And I break it out quarterly now too. So we make it extremely affordable for people, and because I can, my company.
Awesome. Yeah. Well, check that out, tradewith2030.com or tradelikeagenius.com. Tell them David from Adapt 2030 sent you over there. Hope you got something out of our talk today. I mean, I was really trying to make, sense of this, inverted world, at least in my opinion, where you look at it. Again, I look at the news and I don't know how much is scripted or how much of this is theater that we're looking at, because the markets are behaving completely 180 degrees differently than what you're seeing as a theater of news, so take it for what it's worth, pull out the valuable content that could help you right now, and share this video with others so they can also get a better understanding of the real intricate workings of the world. Because right now, with all this volatility around, there's no better time to make money. And with the change of systems, and like you talked about the rollover here coming up with interest rates and trillions of dollars, wow, it is going to be an epic time if you're positioned correctly. And I'll say that with anything in life,
Volatility is your friend. So you want the markets to move, and you just you take your end out of the middle, and don't be greedy, and you'll do quite well over time. Dave, thanks for having me.
Yeah, until next month. Bye for now.